So my name is Fan Yang. I'm a CMT and a CTA, and I'm also the Chief Technical Strategist at fxtimes.com. I'm your instructor today for the Chartist Corner Strategy session. I also do this later today around 3 p.m. Eastern at FX Times, where I'll be joined by Nick Nassad, our Chief Market Analyst. But today, we'll take a look at this market through the technical perspective. All right. So we will get started right away. It's a full day of events for you, and in this hour, I'll just be going over some outlooks in forex markets. Okay. Hope you can appreciate that. All right. So we will start with the daily time frame. Okay. Daily time frame shows that. Okay. So the daily time frame shows that we are in this bullish run since June, right? But you see, these rallies have been overlapping. Okay, so that means, so this is going to be the first reference to the Elliott wave principle. If this was a trending move, okay, this should have not come down to break this pivot here. Okay, now I'm not ruling out that this could still develop into a bullish trend, but just looking at these waves, this does not constitute a bullish impulse wave, okay? Because a bullish impulse wave would have respected this top, and the next rally would have started above our high here around just below 1.34. Okay, so because it's overlapping, this could be a corrective wave still. Okay, this could be A, B, C, D, E kind of wave, and we would be looking for topping around here. Okay, we have some swing projections. For example, this swing projection puts us towards 1.44, which, to be conservative, we would be looking at this top as our resistance at 1.4280. Okay. So that would be the target for this swing. Okay, so that's the daily outlook. One thing we saw here was that the RSI failed to break above 70, and for the bullish scenario, that's not a very good sign. We want to see the RSI break above 70. Okay. Conventionally, maybe when we first learned about the RSI, we learned that if it's below 30, it's oversold. If it's above 70, it's overbought. But here, the RSI broke above 70. Then if it doesn't break back below 40 and comes back up above 60, that's a bullish continuation signal for me. And here, the RSI breaking above 70 is a sign that there is bullish momentum. So it's actually a bullish signal, a trending signal when the RSI goes to the extremes. Okay, maybe in the short term, very short term, it is a reverse. It's a signal that the market needs to pause. But in the longer term, it shows that there is bullish momentum or there is bearish momentum, and the market has strength in that direction. Now, if it's going back and forth, that reflects a sideways or ranging market. And if you look at the euro dollar, it's pretty much been in this sideways action since the drop in 2008. Okay, so now we are up here, so let's take a look at the 4-hour time frame. And another thing is, yes, I use multiple time frame analysis. You can't just look at one time frame. You have to see what is happening in the longer term perspective, and you also want to see the internal structure of your of the market. Okay, so here in the 4-hour time frame, we see that we have had this rally, and now we have a very strong correction. You see the RSI, okay, here it stayed above 40, hit 70, but now it's breaking below 40, showing us that the bullish momentum is weakening. It hasn't shown us a bearish momentum yet. If the RSI breaks below 30, that would be a bearish momentum breakout, but that hasn't happened yet. So we are pretty much in a correction, still within the context of a rising market. Okay, so here we'll zoom in a little bit. Okay, and we have completed, oh, I'm sorry, we are almost going to complete an equality wave at 1.3770. Okay, that would, that's one of the, it's called a Gartley pattern when you have this type of, retrace, when you have this type of correction. Okay, or another term would be an AB equals CD correction. In the Elliott wave principle, in the Elliott wave model, it would be called a zigzag. Okay, so there's different ways to call this. Basically, it's two swings, 3 waves down, and you are testing. If I go to the 1 hour time frame, you see, okay, so I didn't label it. So let's take a look at the Fibonacci. Okay, so from this swing here, you see this little consolidation, and then we had a swing. We got to start from there, or either one of these. Basically, this is around 78.6% retracement. Okay, and that would be an area to look for support here. What you also see in the 1 hour time frame is that we have a bullish divergence forming. Now, price action right now is too heavy to call a bottom. Okay, I would not want to call a bottom. I would just look for the market to give us some sideways action, give us some bullish candles before considering this to be a possible bottom. All right, and in fact, we have still not satisfied equality of this previous swing. Okay, so again, we should be looking for the market to come down towards 1.3770. Maybe even down to 1.37. Okay, if this is equality wave, okay, that means this is 100% of A. This means wave C is equal to 100% of A. But if you extend or you project A a little further, this is the Fibonacci expansion tool. You see that 150% is somewhere down here. Okay, a little bit below 1.37. So 1.37 is a very important pivot, and we know 130. Let's also put down the 138.2% expansion. Okay, so this is the area where we're looking for support for an extended C wave. All right, so basically, this whole area is going to be we're going to be eyeing this area for support. That means if you're in the short here, you might want to start scaling down your positions and look to get out around here unless the market accelerates. You might want to start putting a trailing stop closer. Maybe use the parabolic SAR. For those that don't know what that is, here's the parabolic SAR, which helps you capture gains if you have already if you're already in the profit. You could use this parabolic SAR. See, if the market accelerates, this trailing stop will accelerate with it, and then if the market turns around, you will exit as the market crosses the parabolic SAR. I mean, you have to set it up, or you could manually look for it to cross and then exit. Okay, so we're setting up here that where we might have a rally again back towards the daily time frame now, if the market does indeed respect this rising support. So that's another support factor that we're facing just above 1.37. Okay, so here, if we do bounce back up, we are looking for this top. Of course, we will have to clear the 1.4040 high, so that would be your immediate target, and above that, we would be looking for the 1.4280 high. All right, so that's your outlook for the rest of this week and next week. Let's see if tomorrow, Friday, today as well, these last 2 sessions of the week, let's see if we will find bottoming here. And if the market is to bottom and rally, okay, let's use this. Now, I'm going to get rid of this parabolic bit because it's just getting a little messy here. Okay, we would use this to help us confirm a breakout back into the bullish outlook, the bullish scenario. All right, So that's what I'm looking forward to in the coming week, a bullish outlook for the euro dollar. However, if the market here accelerates and breaks below 1.37, okay, I'm going to put that on hold and wait for the market to break back above this low here. Okay, so now this is why. This is, see, A, B, C, right? Now, if the market is coming back up and fails to break back above 1.3850 and then continues back down, then we could be developing a bearish impulse wave, which means either the correction is not over and we'll be extending this correction between 1.40 and 1. Wherever this ends, 1.37, 1.3650. There would be a huge range, and we could be in a flat, we could be in a triangle. Okay, but if the market rallies and breaks back above 3850, that's going to be an early signal that this is indeed a complete corrective wave. Okay. ABC, we see the ABC correction in the 4-hour time frame, but we go to the 1-hour time frame and we see the internal structure, and it's very clear. A was here, 1, 2, 3, 4, 5, that completed A, and then B was this triangle here, which is A, B, C. But if you break it down even more, it's A, B, C, D, E, 5 waves in this triangle, and now we're breaking back down. So, I'm looking at this, maybe this is our first, this is 1, and maybe 2, 3, 4, 5, coming down towards 1.37. Okay. Alright, so that's the euro dollar. Let's move on now. By the way, if you have any questions, feel free to throw that on the chat. Okay, so moving on now to the pound dollar, the cable. Here's the 4-hour time frame. Let's go back to let's start with the 1-hour time frame. We saw this earlier in the week. Now, last week, if you've been following me on FX Times, I mentioned that a break above 1.63 hinted at a rally towards 1.65, which you would see in the daily time frame. Break above this, or 1.6450 pivot here. Okay, but what we saw here was, whenever we see a breakout, what we want to see is a throwback or pullback to confirm. And here, the market started to be, first of all, started to lose momentum as we created bearish divergence, extended bearish divergence. Although at the time you see the RSI maintained mainly above 40, we cracked below 40 here, but most of the time we sustained this RSI above 40, so that's a bullish type. It's a reflection of a bullish momentum. So the market, you saw this market continue to be in this rising wedge. Okay, so a break above 163 here, I wanted to see a confirmation with the RSI breaking above 70. Okay, so what we had here was a little double top in the RSI, and we didn't break above. We didn't have confirmation, and the RSI continued lower. So as the market here went sideways, the outlook was no longer bullish. It was neutral. We needed to break above this high to be bullish, but if we break below this low, we are bearish. So when the market goes into the sideways action, we were looking for a breakout. So if we look at the 1-hour time frame, okay, we saw this, you could interpret this as a triple top. This could have been also a ascending triangle that failed to break above. In any case, we saw that here the bearish price action started to take over. Very strong. We had a very sharp move here up, and then a very sharp move down. So this type of a V-shape, or inverted V-shape type of a reversal. And we didn't see stopping. We saw this RSI break below 40, and initially we didn't see it break below 30, so that wasn't a bearish scenario just yet. Okay, so but you see, we can't always depend on the RSI because, again, all indicators are lagging. That's why you look at price action to give you the real-time analysis of what the market is thinking. Okay, so here we broke below this previous pivot at 1.6215. Okay, we mentioned in an article in FX Times that this was the target. After the break, we're looking at the width of this channel, okay, or a triple top pattern, whatever you want to call it, and projected in the direction of the breakout. So here we had a breakout, okay, and the market came down. We're looking for the market to go to 1.6085. Okay, here we had consolidation. We had then, this is a pullback. Okay, what we have here is a pullback that came back up, tested the 200 moving average, 50% retracement, and we had very strong bearish candle. This is first of all, we had these whisks or tails, and see here, this is a inverted hanging man, right? And then we had a very strong bearish candle. So this combination was told us that we topped off, that we were respecting this 50%, respecting this 200 moving average. And when the market crosses the 200, the moving average, tests it, kisses it, and goes the other direction. In this case, goes south here. This is a slingshot. This is a very common type of price action or market action where after testing the 200 moving average, if the market is convinced of the bearish outlook, the market will the instrument will slingshot or accelerate. Okay, so anyway, this was a pullback, which again is something that we can look for after a breakout, and in this case we did get a pullback and then a very good signal after the pullback. Okay, all right, so here's the daily time frame looking at this breakout and where this could go. You see the RSI here also, you see the RSI in the daily never broke above 70, and that was, that's a very strong clue that there is no bullish momentum just yet. In the larger perspective, we see this market pretty much just like the euro dollar ranging after dropping in 2008. Okay, so here we are breaking below this rising support, and we can look at this Fibonacci retracement levels. 38.2 matches this pivot down here, which is just below 1.60, around 1.5970. Okay, but when this type of pattern breaks, this rising wedge, our target, we could usually target the base of this wedge, okay, which in this case is around 1.5750 area, which you see is right between your 50% and 61% retracement level, and you see the moving average, 200 moving average, is right now around 1.57. It's just below that, and it should be around that too when the market comes down here to test that zone. So the pound dollar right now, with this heavy price action, we can anticipate the market to come down towards 1.5750. Okay. My preference, okay, so I'm looking at the questions now. Is it the channel break alone was the winner? How do you incorporate that? Regarding cable, what do you mean, how do I incorporate that? Do you use Elliott waves? Yes, I do use Elliott waves here. Okay, let's take a look at this. Okay, first of all, this decline here so far, this could have been a wave 1, and this is a 2. Okay, and we're in a wave 3 right now. Okay, that's the likely situation right now. So on the way back up after finishing wave 3, we shouldn't break above this area here. Okay, so we're looking for a bearish trend towards 1.5750. 1.5750. We should really respect this consolidation zone. We should respect the support zone. We shouldn't overlap it. Okay. Now, if it does overlap, there is still a scenario called nesting, where you would be within this third wave, you're extending this third wave, so you could be, this wave isn't complete, or wave 3 isn't complete. So if that happens, that doesn't naturally eliminate the chances of the market continues going down. It just means that this was in wave 3, or wave 3 hasn't been complete. That's one scenario. Another scenario is that this is A, B, C, and the market's ready to rally back up. Okay, so Elliott wave still has a lot of, it opens up a lot of scenarios. You have to the best time to use the Elliott wave analysis, or to apply Elliott wave analysis, is when you have different scenarios all sort of pointing to the same direction, or at least, they might not point to the same direction eventually, but maybe a wave B or a wave 2 are matched to point to the same direction. Okay, so this is basically A, B, C, or 1, 2, 3. So in either case, this would be this would be a bearish outlook. This would be a bearish swing, whether this is a B or a 3. So whether this is an impulse wave going down or a corrective wave going down, the fact that this was a corrective pattern and then broke below this corrective pattern, that shows that this is bearish. Okay, and you use the combination of price action, because right now, starting here, the bias would have been bearish, and anytime you see a very strong bearish action, that would help you confirm that the momentum is still there, that the intention is still there. Okay, so that's the pound dollar right now, looking towards 1.5750 area, as long as the market remains below this zone. Okay, now that I shouldn't say as long as, I say preferably if the market stays below 1.6150. Okay, in forex, the market is very liquid, and there are times where we have a little bit of overlap with wave 3 and wave 1, but I still think we should hold to it that we don't see the overlap. If we do, it's sort of a hindsight thing where we see that the overlap is okay. In any case, let's move on to the dollar yen. Okay. Do you have dollar ZAR? Oh, I actually don't look at the South African rand, but maybe I'll take a look if we have time at that. Okay, so yes, we'll look at the Aussie dollar and the Kiwi dollar as well. So here's the dollar yen. We're in this channel. We're in this triangle, and right now we have what's called a positive reversal. Now, usually a positive reversal. So basically a positive reversal signal is when your RSI makes a lower low, but your price low, corresponding price low, is higher, and that shows that the market should give us another swing. And using the swing projection, we should be going towards the 84.50 area, 84.40 area. Okay, now this isn't as strong a signal as if this RSI was coming down from above 70, because if it came down from above 70, it would have shown that we have a bullish momentum. Right now we don't have that bullish momentum, so it's not as strong. But nonetheless, when the market is bullish here, we're looking at a swing projection. Now, with some challenge from the descending resistance. Okay, so here's the 4-hour time frame. Okay, what we have here is, now I'm looking at this wave up. This looks like a 1, 2, 3, 4, 5. So this could be our wave 1, or it could be a wave A. Okay, and then we have this 3 wave down. So this could be a wave 2 or a B. And then, see, this is when the market broke above this declining trend line. Okay, again, this is there was an article earlier on FX Times this week mentioning that if we break above this, we should rally to confirm this count. If this is A, B, then there should be a C wave or a wave 3 here. Okay, so that's what's going on right now. We still don't have a bullish momentum. You see the RSI is still below 70, and you see we're still having trouble breaking above 84. 84 is a very important level because, okay, first of all, it's a 61.8% retracement. It's also, you see the neckline of this head and shoulder, so it's a very important support, which now is resistance. And you saw the last time we tested it, there was a strong rejection. We came from a bullish intention all the way to a outside bar, a bearish outside bar. So that was a very strong rejection. So now, if it does break 84, so if it does break a zone where you're anticipating a lot of rejection, that means that the market is bullish. So right now we're still not getting that. I'm sorry, not 84, 83. Okay, we're at the 83 level. This is the neckline at 83, and we need to break above 83 to confirm this bullish scenario. Here's a look at the 1 hour time frame. So we broke down these waves, 1, 2, 3, 4, 5, A, B, or 1, 2, and now we're in this third wave, right? So here, 1, 2, 3, 4, 5. I think we're done with one impulse wave here. Okay, and we should be coming back down now. Oh. So according to this wave count, and you know what? I'm not just using the wave count. You also see an extended bearish divergence. Okay, and you just need to see some price action break below. Let's see what we have, a pivot here. Okay, let me zoom in a little bit. Okay, so you see this little consolidation zone here. Okay, we want to see the market break below that 84, 82, 85, I would say. No, just if the market in the 1 hour time frame can close below that, we might be looking at a correction. Okay, where we would look at Fibonacci retracement. Okay, and look for it to maybe retrace 50%. Oh, whoops. But not more than 61.8%. We don't want to see this retrace more than that. If we do, then this bullish scenario is questionable. So right now we are bearish in the short term, but when it comes to this 82.50 area, we should be looking for a bottom, anticipating some type of reversal back towards the bullish scenario, which would break above 83. And if we have this is a 100% projection, we would go up towards 83.40, okay, or 83, 42, 43 area. That would be a wave equality. Now, if this wave extends, which again, it still could be a wave C or a wave 3, it could be a zigzag here, where we could be developing a impulse wave up. Then looking at 150%, 138.2%, we're looking at the 84 as the next target. Okay, so if the market breaks above 83, we are looking at 83.40 and 84 as the next targets in the short term. All right, in the longer term, the market is basically sideways, and we would consider the bullish scenario if the market breaks above 84.50. Okay, so if the market breaks above 84.50, then we could be looking for a throwback, and if that throwback respects this zone here and rallies, then we should be looking at a we should be looking at a longer term bullish scenario. Okay, for now we're still stuck within this triangle, so the bullish scenario is very limited. All right. Okay, so that's the dollar yen. I want to go to some commodity currencies, in the Aussie dollar and the New Zealand dollar, the Kiwi dollar. All right, you guys see the New Zealand US dollar pair? And we should be looking at 1 hour time frame. We should also be seeing the RSI here. Okay, so basically yesterday we had this market in this channel. Well, this is the 1 hour time frame. Let me just set it up in the daily time frame first. Okay, we're in this decline, in this correction, and I'm looking for wave equality. Okay, so pointing down towards 0.72 area. Okay, now here the market broke below this 200 moving average, but again, that's not always a clear signal. You have this break below, came right back up. You see the market break below, break below. So it's not always a very clean signal, but you see, we could start considering the bearish outlook now if the RSI also here breaks below 30. However, if you look at the structure, this looks like a Gartley or let me just add the 78.6% in there. Okay, so this looks like a Gartley pattern if it comes down towards the 0.72 area. So even if this is a bearish trend, we should still expect some support around 0.72 that should bring us back to maybe test this topping action, or at least test the 0.73 40 area, which the market is at right now. So the market is trying to break below this pivot here, which you see goes back a little bit. Okay, and a break below that should accelerate further towards 0.72. Right now we have, okay, here's the 4-hour time frame, and this looks like a very strong bearish, this looks like a bearish impulse wave. I don't have the wave count here, but let's take a look down here. We basically have a flag pattern, as we mentioned, in the 1-hour time frame. Actually, looks we could see it here as well, where we would use this swing projection. So the market hasn't gone to that yet, 0.7285, but it's we did break below this previous low that was set after the the interest rate statement. So if this low at 0.7330 or 7328 breaks, or if the market closes below that, then we should have confirmation that the market should be able to come down towards this equality projection. Okay, we do have, however, a bullish, very long, extended bullish divergence. So look for some support here. Even if the market breaks below our support here, look for a little bit of a pullback. Okay, but this market should come down towards 0.72. All right, and let's look at the Aussie dollar. Okay, so Aussie dollar to me is very uninteresting until the market can break either above or below this triangle. Okay, so it's interesting now, right? But really, I want to see the market break below parity, not just this support. Parity is really a psychological support, and we need the market to break below that 1.0, and that would give us some bearish outlook. But you see, we have this consolidation zone here. So again, it's sometimes when you break out of a triangle, the consolidation is not over. It extends into or expands into a larger consolidation. But even if it does, you see that if we come down, we could come down towards the 0.98 area. Okay, so that could be our target at the moment, 0.98. 4-hour time frame. So let's see if this, we have this recent rising support. 4-hour time frame is not confirming our bearish outlook just yet. You see the parity level is still holding up. We have the RSI still above 30, so what we want to see for that bearish outlook to have a stronger case, we want to see the RSI break below 30, price action, market action break below parity, pullback would help. This type of action would help us confirm a decline towards 0.98. Alright, so that's the Aussie dollar. And let's take a look at gold. Okay, so gold here, where should we start? Okay, so we'll start in the daily time frame, because you see a very clear sort of a attempt to top off here in the daily time frame. Look at these candles. There's the size of this bearish candle. Okay, look at the size of these small bearish candles here, these candles here, but now compare them to these candles here. Okay, so it's comparable, and it's coming off the top here. Now we broke above 1430, which was the all-time high established here back in December, but after a breakout, we didn't have any confirmation. We're sort of hanging around. So when the market doesn't break and sustain the break, it's called clear out, and we might have a strong correction right now in gold. Okay. Today we already have a very strong move, so let's take a look at the 4-hour time frame. Okay. All right. So the anticipation here was that gold was in a very rhythmic rally, meaning if you connect the bottoms here, we were bouncing off these bottoms, and then here we bounced off, and basically now we broke it. We broke this rising support. Okay, broke a closer, more recent speed line, which was just slightly slower, but still pretty sharp. And the 1418 area was the first pivot I had. Okay? And then below 1418 we would be looking at 1410, and the market now is accelerating past that, and now the next target is 1393. You see the RSI shows break below 40, which means that we lost bullish momentum and we're about to show bearish momentum. Okay, so now we're looking at the 1393 pivot area. Okay, so look for that to provide some support. But if the market continues, you see this. Okay, so this is what we're going to do. So this looks like a 1, 2, 3. Now, if this market rallies from here and breaks above this low here, then I would say gold has completed the zigzag and could be continuing a bullish attempt. However, a failure to break back above here, 1423 area. So 1423 is this pivot here. Failure to break above that means that we are in a longer, more meaningful correction. So we would have completed an impulse wave down. That means this would be wave A. Okay, so that's one scenario. The other scenario is this is already A, B, C, and a rally from 1393 area. Okay, we could use the Fibonacci expansion as well to target this swing right now. Okay, so 161.8. Now we might even anticipate some support here at 1398.50. Okay, so look for some support here and see if the swing back up can break above 1423. If it can't, then we're looking at a larger correction that could go either in price coming down or in time going sideways. Okay. All right, so that's gold. Since we have one more here, dollar Swiss. So let me go to that chart. Okay, I'm just waiting for it to load, and then I'll be sharing it. Alright, so you should be seeing dollar Swizzy, daily time frame with the RSI on the bottom. Okay. Dollar Swizzy, we broke below, we're at this all-time low here in the dollar Swizzy, established at 0.92, just above, slightly above 0.92. So when we broke below this 0.93 area, we were looking at a bearish breakout scenario. And when we had that, we looked at all these swing projections. One is this swing from this pivot point. Basically, all these swing projections, this swing projected here. We have this channel breakout projection. So all of these pointed towards 0.90, 0.89 zone. Okay. Now that we broke it, we want to see some confirmation. So far, the market is not confirming. So far, it's showing that this could be a clear out. Remember, we had the difference between a breakout, clear out. A breakout is a weak or a fake breakout that pops the market back up into the zone or the pattern it broke out from. So this is possible. Right now, either case is possible. We have to keep both scenarios open. Here's the 4-hour time frame. Okay, and to me, the more likely scenario is a bearish continuation. This could be a nested, bullish impulse wave developing. That could very well happen, but to me, it just looks like a corrective structure. Okay, looks like a rising wedge, or all right, or a channel going up, or a flag pattern. It just depends on how you look at it. Either way, this looks like a corrective wave. So let's see if this could come up and test the 0.9415 area. This is sort of the projection when the market broke above. You see this high here, but then you see very choppy action. Okay, tested the 61, cracked the 61.8 and rallied. Before that, we also cracked the 61.8 and rallied. So choppy, corrective structure. And I'm going to look for, this 200 moving average in 4-hour time frame and a 38.2% retracement and this previous pivot here. So there's some resistance factors here. So again, look for the market to find some resistance there, but I wouldn't anticipate the bearish continuation so I would anticipate it come down around here, but I might, basically looking at the price action, if it slows down, I would exit here or scale down unless the market accelerates and pushes below 0.92. If it pushes below 0.92, we're looking at, the 0.90, 0.89 area as the next target. Okay. All right. So you see here the market has an extended bullish divergence, and this is one of those cases where even though the market is showing bullish divergence, it continues to be bearish, continues to make lower highs and lower lows. All right. The RSI. I have the red line here in the RSI to help me smooth out. Basically, when I talk about the RSI turning, it is when the RSI crosses its 3 moving average. So here, sometimes we see the RSI, turning a little bit, but for me, it helps me decide exactly when the RSI has turned, when it crosses over the moving average. The red line here is my addition to the RSI attachment, which is 3-period simple moving average. Okay. All right, so that's the dollar Swizzy, and we are out of time today. So thank you guys for sitting through this 45 minutes of discussion, of this analysis. I hope this was helpful. I hope you can join me at FX Times when you don't have any FX Street events. So today, later, and every week we have this 3 p.m. Chartist Corner Strategy session where I would actually be joined by Nick Nassad, our chief market analyst. He'll give us some fundamental backdrop as well. All right, so thank you guys for giving me your time, and enjoy the rest of the webinars here. Thank you, FX Street, as well. So enjoy. Bye-bye.